We are very focused on operating issues at companies. We also tend to be constructive investors in difficult situations. I think the reputation of turnaround investing is very much bare-knuckled and sort of, here's the deal, take it, and I don't really care what you think. Our approach over 20 years has really been to try to build more consensus and to work with the different stakeholders and understand what their issues are, present them with a set of facts, be fairly transparent in our approach, and we've found that if you approach a situation that way, in most circumstances, you're going to end up with the right result. So one, we try to be constructive and we try to involve the different stakeholders early in the process. Two, we tend to spend most of our effort focusing on the business issues relating to the guts and operations of a company rather than focusing on the capital structure. We understand that ultimately you have to get the right capital structure in place, you have to have the right transaction structure, but for us the real value added of KPS as a general partner is really focusing on the operations of a company. So that's what we tend to do. I think 2009 will absolutely be our busiest year. That doesn't necessarily mean we'll deploy the most capital we've ever deployed. We're seeing a tremendous number of opportunities, and our job is to be diligent in analyzing those opportunities, not to feel like just because there's a lot of stuff going on out there we need to rush and put money to work, but really to spend a lot of time understanding the businesses. Given the uncertainties in the economy, not clear when the recovery is going to happen, you need to be particularly diligent in terms of understanding where the businesses are going. So we're going to be spending a lot of time and resources in 2009. I'm sure we'll be deploying a decent amount of capital, but I can't tell you that it's going to be the most we've ever deployed. I will tell you that between now and mid-2010, we will put out a lot of money. In the old days, you'd build in a case where you'd say, okay, well, maybe things will be worse by 10%, then they're going to rebound and be better. I think now you have to stress test your companies much more aggressively, and you have to be prepared as an investor to stand behind those businesses if things don't recover as quickly as you hope they do. So I think you have to be prepared to put more capital into transactions than the transaction price might suggest.